70 to 90% of traders end up losing in the market, and 95% of that reason is because of panic selling. This is going to be an important aspect of today's video because I need to talk about the state of the market, a ton of plays, how they're trending, what's the narrative coming into this week. And the reason I'm bringing this up because I want you guys to know before we start the week that every single trade that you enter, there is somebody else on the other side of that trade that is either going to lose money and or make money. And you're going to be doing the opposite. It's every single man for themselves in this market, every single community against themselves in this market. Now, this could mean our community against a random institution, our community against retail traders sitting on their couch, or it could mean you against your grandpa. You never know who's in that trade at what time. This is going to be an important aspect of today's video, and at the end of the video, I'm going to be giving you a special ticker to put on your radar this week to make some money. Without further ado, guys, we have to talk about the key events that is about to happen. I hope you guys enjoy your weekend. Let's get ready to make some money. Happy Sunday, happy day of rest. As always, hit that like button. Let's get into it. Okay, so I want to talk about hedge funds short sellers. First of all, short sellers ended up giving SoundHound, ticker symbol SOUN, a bad report this week, downgrading to an underwrite by a couple of analysts, stating that their AI speech recognition tech is a commodity service and that the company is failing. There's not much to say about SoundHound, but I know a lot of you guys keep it on your radar, as well as Eli Lilly and some other plays. Speaking of those plays, some undervalued stocks to buy, according to hedge funds, coming into the week, they give Booking Holdings, ticker symbol BKNG, ServiceNow, Now, AVGO, Broadcom.com, MRK, Merrick & Co., Oracle, ORCL, Eli Lilly, AMD, Uber Technologies, MasterCard, Visa, CRM, and the list goes on and on. Also, 3 stocks that are making hedge fund managers envious are Chipotle Mexican Grill, Netflix, and LMB, stating that hedge funds are actually missing out on these trends and retail investors are the ones causing them to run up. Okay, so before we brush on these plays and the narrative coming into the market, the key events that are happening this week are new home sales data on Monday, CB consumer confidence data on Tuesday, nothing really happening on Wednesday, US Q4 2023 GDP data on Thursday, February PCE inflation Friday, as well as Chair Powell speaking. There are a total of 5 Fed speaker events, which is another busy week from last week. We had FOMC last week. We had a couple other things happening that shifted the overall market, and this week is going to be the same thing, watching that PCE inflation catalyst. Now, LMB looking decent. Apparently, retail is pumping this one up, as well as Chipotle Mexican Grill, which just does not make sense because look at the astronomical growth in this company. Now, one thing that I wanted to point out with a lot of these tickers that we are going to be talking about is where they are in the trading range. Now, this is simple. This yellow trend line is not something that should be taken 100% accurately. It should be taken with a grain of salt, but this is more so the trajectory a company is on. This is more so 50% is traded above this line, 50% is traded below this line, and it's kind of easy to draw them out. The reason you're taking it with a grain of salt is because, of course, a company could have a massive earnings beat. A company could be undervalued for a somewhat period of time, and then could eventually gain some momentum, and then become valued at a regular price where they should be at, right? If you take a look, Chipotle is way extended out of this trend line, and you can think of this trend line as a magnet. At some point, Chipotle is probably going to come back down or come a lot closer to this trend line, which would be around $1,600 as of right now. Overall, Chipotle Mexican Grill has the next target right around $3,175, and it has a chance to get there pretty soon. If we end up falling and getting rejected, which we're going to talk about the narrative in the market later, you're watching $2,450. Same thing here. Netflix, ticker symbol NFLX. You can see that it is trading above this midline that we have drawn out. Netflix has levels up at $700 or a retracement back down to $590. ORCL, we talked about on the channel, Oracle, you can see it is way out of its trading range according to its trajectory. And all of these tickers that we're looking at, we are sitting on the weekly time frame. You can see what Oracle has done all the way back here in very early 2000s, late 1900s, and it came back down acting as a magnet right at this trend line. Tested it several times. So Oracle is way out of here, breaking above the 2.618 on the fib. Next level is $150 for Oracle, or if we break under this, you're watching $105. And I'm going to get to my point pretty soon. I just want to cover a couple more tickers. One that I think is going to sell off pretty soon is Meta, ticker symbol META, trading at 5 10, testing the 1618 on the fib, and has potential to retrace all the way back down to 360 from $510. Now you can see Meta is a little bit above its midline for growth. As of right now, the trajectory isn't looking bad. It's just getting a little bit of whipsaw here and there. But one thing I wanted to note is every single time Meta tested this height of this aggressive trend line, it got put back in its place. You saw it twice back here. You saw it another couple times right in 2021. And now Meta is doing it again, testing the top of this aggressive ascending trend line of resistance. Okay, so be aware of this on Meta. As soon as there's a negative catalyst for the overall market, I see Meta selling off a little bit, along with a bunch of these plays. Now, if you haven't noticed, the stocks that we're talking about are the ones that hedge funds pointed out that are, in quotes, undervalued, besides Meta. Okay, I brought that one up on my own. ServiceNow, ticker symbol NOW, trading above its mid-range as well. Levels for rejection are 865. Levels of support are 675. AVGO, this thing just has been ripping heads off, clearly way off its trajectory. We don't have a midline drawn out here, but breaking above the 3618 on the fib, potentially coming up to the top of the fib zone at 1460 at the 4236. Watch AVGO for this thing to potentially get hit hard over the next couple of months. Apple, there's not much to say here. This thing is way out of its trajectory line. Of course, it's the highest valued company, and you're seeing it get a double top up here. I think Apple is going to come down far. It's going to come down for a long time, and I think this is just the beginning of it. Could I be wrong? Absolutely. But I just want to say that it is well off its growth trajectory, and Apple has a shot at coming back all the way down to around $110. Nvidia, of course, there's not much to say with Nvidia. Look how disgusting this chart is. If you see a chart like this, chances are it's going to come back down. There is no midline trajectory. Nvidia would have to come all the way back down to around $400 over the next year or so, which would be cutting this thing more than in half. Okay, so that's just something to note as well. Even Tesla is overvalued and off of its trajectory, in my opinion. Now, why am I bringing this all up? The reason I'm bringing this all up is because in 2022, into this year, inflation has been extremely high. People ran out of COVID money, and everybody is complaining that they can't afford groceries, right? How are we still seeing all of these stocks above their midline? How are we seeing all of these stocks still extremely overvalued? Yet, according to hedge funds, they are undervalued. Okay, according to hedge funds, they're undervalued because they want retail to jump back in so they can dump on retail. This is number one. But number two is, if this is the case and the only thing looking ahead is potentially rates for longer but eventually a cut and not a raise, then stocks can keep pumping. Now, before I give you guys this last ticker, I'm going to tell you to get in the Discord. The link is right under the video. You're not going to regret it. If you're not in any Discords, I'm telling you, just take that step forward to get in the Discord for the rest of the year to level up your trading journey. Come talk with me. Come talk with the most amazing people, stocks as well as crypto, all day long. It's basically a big group chat where we are all trying to become financially free together. It's better to do it as a community. We post our gains, post our losses, and I post my trades as soon as I take them. Just to disclose, I am still in my Tesla puts. Also, guys, if you want up to 15 free stocks, each valued up to $2 grand per stock, use my link, sign up for Moomoo, open an account, and deposit $1 into there to start earning all of these benefits, including free stocks, 8.1% APY on your uninvested cash for 3 months, then 5.1%, level 2 order book data, access to trading options, going long, going short, and more. So go do that. Both of those links are in the top of the description and pinned in the top of comments. Now, what stock am I talking about? First of all, Ukraine officials report Russian air attack on Kyiv, and I want to put TXT on your radar, which is a defense sector stock that is doing extremely well, breaking above the 1 on the fib, coming all the way up to the 1618, potentially right around $115 from 95.85 as we speak. This stock got a clean accumulation, clean breakout, and has been climbing, and more news is coming out about war, and I want you to put this one on your radar. Let me know if you are in this or you're happy I put it on your radar in the comments down below. Just drop TXT in the comments. That is it, guys. I love you all. Lottery Stocks out.